this is Christian's intro. Christian does market data analysis for a multifamily asset management company. In other words, Christian plays in Excel with apartment numbers all day. He has a presentation for work coming up at the beginning of September. Today he will be sharing his presentation with us. Not in the hopes to persuade us to become multifamily apartment home investors in Denver, but to persuade us that he knows what he's talking about with regards to multifamily assets in Denver. Please help me welcome Christian and forgive him for using jargon. I know he would be very happy to answer any questions outside of the regularly scheduled meeting. Awesome.
All right.
Thanks, Anook. Yes, but if you do want to become multifamily market investors, just let me know and I can get you set up with a broker. Let's begin. Good morning, everyone, and welcome to the 2022 Greystar Multifamily Market Update. This update is for Greystar clients and colleagues or future colleagues to gain a better understanding of where the market currently stands. Today, we'll be talking about occupancy, traffic and leasing, rents, pipeline and absorption of new construction, and we'll be touching on demographics. And this will all be for the Colorado, Denver, Lakewood, Aurora MSA. So let's dive into it. This is the point where I also want to challenge you with a question. Ask yourself, do I feel confident in my current investments in the multifamily market? And if you don't have any investments in the market currently, ask yourself, what's holding me back? Am I ready to make an investment? Greystar has a big presence around the globe, and Colorado's no exception. We have 151 communities in Colorado, almost 43,000 units, and that equates to millions of good experiences for our residents. When I discuss Greystar statistics today, the Denver, Aurora, Lakewood MSA is the area I'll be referring to, and as you can see it on the screen, the number of units that will be included with the Greystar Colorado data is almost the 30,000 units and 104 communities. Conveniently, the first data source, or the most commonly used one that I'll be referring to today, also uses the same geographic definition for their statistics, with their units totaling almost 275,000 in the area. So as a data provider, they have a lot more data available. And when I refer to RealPage, I'll be talking about the market area on the map on the left. When I refer to Apartment Insights, I'll be referring to the market area on the right. The difference is not major. The RealPage map covers a lot greater geographic area, but those areas do not have many more apartment communities than what's located in the statistical MSA area. So let's dig into the data. When thinking of occupancy, the more the better. What occupancy would you need moving forward to make your investment strategy work? I'm here to tell you that Greystar renewal rates declined in June, but for most of the year, they've been holding around the 42 to 35% range, and that's okay. Occupancy turnover equates to more chances for a new renter to get in and pay higher rates. Occupancy has been very steady this year at around 95%. The average cost of owning a home is still higher than the average cost of renting, and that gap is increasing. Colorado's population increased by about 62,000 people during 2021, or 0.11% of the population. And Colorado's recovered 112% of the jobs we lost due to the pandemic. currently the unemployment rate is around 4%, and there's been a 0.1% month over month improvement there. There's more people in Colorado in the labor force than ever before. The biggest reason for sustained high occupancy is due to low supply. The pandemic slowed down the construction pipeline substantially. Everybody was unsure about what was going on, and so they may have had plans in place to build a new community, but they took it off the drawing board until they gained a little bit more certainty about the market. And now, as we'll discuss later, we're in a little bit of a situation where a lot more supply is coming on all at once in the near future. So what does occupancy mean for general traffic and leasing? Well, we've been on the same path for Greystar that we have in the prior year. 2022, you can see the pandemic hurt visits quite substantially. They dropped well below what's normal for the spring and summertime months. But in 2022, we're still a little bit below where we were in 2021 in every month, but it's still on that same seasonal bell curve. And leases, we're still about the same where we are every year, but again, a little bit lower on leases. This could be due to a lot of things, including apartments, being so occupied and rents being high. People are not wanting to, sign new leases at those rates, or there's just no apartments available for them to occupy. But let's talk about concessions. Concessions are specials given to renters to encourage them to lease. You can see back in July of 2020, January 2021, concessions were pretty much at an all-time high in this market area. They have dropped to relatively zero compared to where they were back in those time frames. So specials in this area are currently at about 7% average concession of 1 month's rent. Demand and visits. So Greystar resident visits are down, but for studio units, they're still very high in the MSA, and the visits are up a little bit year over year. Rents. So rents, this is what it boils down to, right? This is the bread and butter. If you have rents coming in, then your investment strategy is on its way to making sense. And look at this. 2022 rents are higher percent growth than they have ever been before. And over the past 3 months, rent growth is higher than it was at any point during 2021, which was a banner year for apartment rent growth. And renewal effective rent growth is when an apartment renter renews, their new lease over lease rent is what's reflected on the chart on the right, which is also at an all-time high. The rent per square foot for Greystar's portfolio is closely following that of the MSA. And so Greystar is outperforming the metropolitan statistical area on rent per square foot in most months. Lease trade out. This graph shows where new leases are compared to renewal leases in the metro. And what this is essentially showing is trade out has been sustained at a high level. So when a lease turns over, the next lease after that is much higher, and that's where we get the rent growth. So what's happening in the future? Well, market rent is not going to grow as quickly as it has been over the past 2 years. That is because of quite a bit of new supply that's coming online in the near future. It should be about 6% rent growth over the next year, year and a half. And then we're not real sure what's going to happen from there, but 2024 and beyond, we may see a big slowdown in construction activity, which could mean increased rent growth. So pipeline and absorption, let's get into it. What's happening? How many apartments are actually going to be built over the coming years? Here's a heat map showing you where the biggest concentrations of apartments that will be developed will be located. And there's currently over 40,000 units under construction, which is about an 8% increase in current inventory, which is pretty major. There's 71,000 units planned additionally to those 40,000 units under construction, and there's 8,600 units expected to complete still in 2020. So here's a breakdown of units by location, by submarket, and most of that activity is going to be occurring in downtown Denver in the central business district, as you can see by that big slice of pie right there. Next, Denver Northwest, Denver Northeast, DIA area will also see quite a bit of activity here in the near future. And when we talk about the pipeline, 2022, we don't have a whole lot left, but a lot of this is delivering in 2023. So it's going to be a glut of activity. And also, there's a recent legislation that made developers want to submit plans for development in a hurry. They wanted to get that in before this legislation came through, and they were saddled with a whole lot of additional fees. And so there was actually a 400% increase in development plans submitted in June over any prior month. So we're going to see a lot of development here in the near future. But then after that, what's likely going to happen is it's going to fall off almost completely. Most of what these charts are showing is most of the developments are to be determined on date, and they also have not yet been approved. So construction started is around that 40,000 level, but all of these other bars mean that construction has not yet begun. Greystar consults with developers on their projects. So we don't have to manage the units for a client, but if you want us to look at your pre-development plans and guide you on how to best execute your development, let us know. We currently have over 70 projects on the Front Range and over 18,000 units in those projects that we're consulting on. And that's all across the Front Range. In the Denver Metro, there's 50 plus projects that we're working on right there in the Metro, and over 12,000 units in that area. And so what I want to say is it's going to be a great market, and any type of investment you can make in the market is going to be very fruitful for you. So let me know if you have any questions, and we'd be happy to assist you with your investment. Thank you.